Ever wonder how Warren Buffett picks his winning stocks?
Hmm.
Well, today we're going to put Accenture, the
Okay.
global consulting giant,
Yeah.
through the legendary value investing test.
Interesting.
Will it make the grade?
Let's find out.
Stick around, and before we get started,
Yes.
hit that subscribe button so you don't miss out on future deep dives.
All right, so let's get down to business.
Yeah.
Okay. Accenture,
Yeah,
global professional services company.
huge.
5 main segments,
Okay.
from strategy consulting to tech implementation.
Mm-hmm.
They're spread across over 120 countries.
Wow.
Not exactly a small operation.
So what are the numbers saying?
Well,
Their latest financials
yes.
show a revenue of $64.9 billion,
Huge.
with a record $81 billion in new bookings for fiscal year 2024.
Wow.
Those are some seriously impressive figures.
Those numbers definitely paint a picture of strength, wouldn't you say?
Definitely.
It suggests they're not just keeping up with the competition, but actually pulling ahead.
Interesting.
And that's particularly interesting
Yeah.
when you consider the overall industry growth.
Oh.
IT consulting,
Mm-hmm.
projected to reach almost $2 trillion by 2030.
So they're riding a pretty massive wave.
More like steering the ship. Think about it.
yeah.
Digital transformation,
Right.
cloud computing,
Mm-hmm.
and cybersecurity,
Absolutely.
all exploding in demand.
Yeah.
Accenture is right there
With the expertise.
with the expertise that companies need.
Seems like they're going all in
Yeah.
on some of those key trends,
Yeah.
especially when it comes to generative AI.
Right.
They reported over $2 billion
Wow.
in AI-related bookings this year alone.
Exactly.
That's a huge investment.
It is.
It's a clear signal.
Yeah.
They see AI as a major growth driver.
Did they do?
But is it a smart move or a risky bet?
We'll have to dig a little deeper.
Okay.
One thing that catches my eye.
Yeah.
Stability at the top. Julie Sweet, the CEO,
Mm-hmm.
has been with Accenture since 2010,
Really?
worked her way up through the ranks.
Wow.
That kind of leadership longevity speaks volumes.
Suggests a strong internal culture and a consistent strategic vision, right?
Absolutely.
I mean, it's worth noting.
Yeah.
Accenture has a history
Mm-hmm.
of shareholder-friendly moves,
Right.
like consistent dividend growth since 2005.
Yeah.
And stock buybacks.
Absolutely.
Shows that management is aligned
Mm-hmm.
with investor interests.
Definitely.
Let's talk about that $3 billion AI gamble
Okay.
they took in 2023.
Big bet.
Bold move.
It is.
Do you think it's paying off?
I don't know.
And what does it tell us
Yeah.
about their long-term vision?
That's the million-dollar question.
I mean, to answer it,
Yeah.
we need to dive into their financials.
We do.
Are they using that cash wisely?
Right.
Are they generating strong returns?
Exactly.
Let's find out.
Let's do it.
Now, I'm no financial whiz,
Okay.
but even I can see that Accenture has some pretty impressive numbers.
They really do.
Okay.
Their revenue is up,
Mm.
profit margins are stable,
Okay.
and they're generating a ton of free cash flow.
That's good.
$8.61 billion to be exact.
Wow.
Now,
Yeah.
for those who might not be familiar with free cash flow,
Okay.
it's essentially the cash a company has left over
Right.
after paying for its operating expenses
Okay.
and capital expenditures.
Gotcha.
It's a key indicator of financial health.
Mm-hmm.
And it gives a company flexibility to reinvest in the business,
Okay.
make acquisitions, or reward shareholders through dividends and buybacks.
So healthy free cash flow is a good sign.
Absolutely.
Okay, cool.
And there's another thing
Yeah.
that really stands out to me.
Okay.
Their debt-to-equity ratio
Mm-hmm.
is a mere 0.28.
Okay.
What that means is for every dollar of shareholder equity, they only use 28 cents of debt.
Okay. I remember reading that Warren Buffett really likes companies with low debt.
He does.
What's the advantage of that?
It's all about financial stability.
Okay.
A low debt burden
Mm-hmm.
gives companies a cushion to weather economic storms
Right.
and makes them less vulnerable to interest rate hikes.
Okay.
It's a sign of prudent financial management,
Gotcha.
aligns perfectly with Buffett's investment philosophy.
Interesting.
So we've seen that Accenture has a strong track record,
Mm-hmm.
a solid leadership team,
Right.
and a healthy financial position.
Yeah.
But how does the market view their potential?
That's a great question.
That's a question we'll explore in the second half of our deep dive.
Okay.
But before we get to that, let's take a quick break. Don't forget all the sources we used for this deep dive are linked in the description below. While you're down there, let us know in the comments what other companies you'd like us to analyze in future episodes. We love hearing from you. We'll be back in a flash with more insights on Accenture, so don't go anywhere.
All right, we're back and ready to continue our deep dive into Accenture. We've established that they're a global force with impressive financials and a knack for staying ahead of the tech curve.
Yes.
But what's the market's take on their future prospects?
Well, if we look at Wall Street,
Yeah.
the general consensus among analysts is a moderate buy rating, with a price target implying a potential upside of about 9%.
Okay.
Not too shabby, but I'm always a bit curious about whether the market might be missing something.
What do you mean? Do you think they're underestimating Accenture's potential?
It's possible.
Okay.
There's a lot of positive buzz surrounding their strong earnings reports and leadership in the AI space.
Right.
But we have to ask ourselves, is this hype warranted?
Right.
Or are we seeing a case of irrational exuberance?
Okay.
Sometimes the market gets carried away with excitement.
Yeah. I mean, on the flip side, a whopping 75% of Accenture's shares are held by institutions.
Right.
That's a pretty big vote of confidence from what's often called smart money.
Yeah.
What do you make of that?
That's a great point. Institutional investors tend to have a longer-term investment horizon and deeper resources for research.
Okay.
Their bullishness on Accenture suggests they see a strong foundation and growth potential that might not be immediately obvious to individual investors.
Interesting. But what about the folks on the inside?
Yeah.
The ones who arguably know the company best? Insider holdings are surprisingly low at just 0.02%.
Right.
And the transactions have been mixed.
Yeah.
Some buying and some selling. What can we glean from that?
Insider transactions can be a bit tricky to interpret.
Okay.
Low overall holdings could simply reflect company policy
Okay.
or personal financial decisions.
Right.
The mixed transactions might indicate differing opinions about future prospects, or it could just be routine portfolio management.
Oh, okay.
It's rarely a clear-cut signal either way.
So no smoking gun there.
Right.
What if we shift gears and do a SWOT analysis?
Okay.
Strengths, weaknesses, opportunities, and threats.
Yeah.
Wouldn't this give us a clearer picture of Accenture's overall competitive position and potential risks?
Absolutely. It's a classic framework for assessing a company's strategic landscape.
Okay, cool.
Let's start with their strengths.
Okay.
Accenture boasts global reach, a wide array of service offerings, and deep expertise in hot areas like AI and cloud computing.
Right.
Not to mention their brand recognition carries significant weight.
Huge.
These factors create a substantial moat around the business, making it difficult for competitors to make inroads.
But even the most formidable castle has its weak points, right?
Right.
What are some vulnerabilities we need to consider when it comes to Accenture?
One potential weakness is their dependence on a few major clients.
Okay.
If one of those relationships were to sour, it could have a significant impact on revenue.
Right.
And we can't ignore the high turnover that's inherent to the consulting industry.
Right.
That can be a challenge both in terms of cost and maintaining consistent service quality.
Those are definitely factors to keep in mind. But on a more optimistic note, digital transformation is still in its early stages.
It is.
And emerging markets are ripe for disruption.
Absolutely.
How can Accenture capitalize on these trends?
That's where their forward-thinking investments in areas like AI and cloud computing really come into play.
Okay.
They're positioning themselves to be the go-to partner for companies navigating these complex transitions. And with their global reach, they're uniquely positioned to tap into growth opportunities in emerging markets.
Of course, we can't forget about the T in SWOT.
Right.
The threats.
Yeah.
Competition in the IT consulting world is fierce.
Very competitive.
Technology evolves at a breakneck pace.
It does.
And cybersecurity threats are a constant concern.
Absolutely.
How is Accenture mitigating these risks?
It all comes down to adaptability.
Okay.
And staying ahead of the curve.
Right.
They're investing heavily in research and development.
Okay.
Forming strategic partnerships and building a cybersecurity culture that prioritizes vigilance and proactive defense.
Right.
It's a constant arms race.
Yeah.
But Accenture seems to be up to the challenge. So we've taken a comprehensive look at Accenture, their business, their financials, their leadership, the market's perspective, and even potential risks and opportunities.
So the million-dollar question, is Accenture a Buffett-worthy investment?
That's for you to decide.
Sure.
We've laid out the information, the financials, the positives, the negatives, and the uncertainties.
Right.
What aspects stand out to you?
Yeah.
What's your gut feeling?
Honestly, I'm pretty impressed.
Okay.
They're not just some old school company clinging to the past.
Right.
They're innovating,
Yeah.
adapting, and they're clearly thinking long term.
They are. And let's not forget their significant commitment to AI.
Right.
It's undeniably a risky bet.
Yeah.
But if it pays off, it could unlock tremendous value and propel them to even greater heights. It's certainly something to monitor closely. Pay attention to their employee satisfaction scores, their talent acquisition strategies, and their investments in training and development. A happy and engaged workforce is a competitive advantage in any industry, especially in the fast-paced world of consulting.
So to sum it all up for our listeners,
Yes.
watch their AI execution.
Yeah.
Monitor their client diversification strategy, and assess their talent management capabilities.
Right.
Those are the 3 key areas to focus on when evaluating Accenture as a potential investment.
Spot on. And remember, this is just our initial analysis.
Right.
Investing requires diligent research and due diligence.
Of course.
Don't rely solely on our deep dive.
Yeah.
Dig into their financial statements, read industry reports, and talk to other investors to form your own informed opinion.
Absolutely. Do your homework, folks. And don't forget to hit that subscribe button to catch all our future deep dives into fascinating companies and industries. We're always exploring new investment ideas and sharing our insights with you.
And as always, the information we've presented in this deep dive is for informational purposes only and does not constitute financial advice. Always consult with a qualified professional before making any investment decisions.
Until next time, keep learning, keep exploring, and keep diving deep.